All right, is this thing? I don't even know if I know how to do this anymore. Welcome back, everybody. It's been a while. Apologize for the absence. The rumors of my death have been highly exaggerated. If you know that quote, feel free to put it in the comments below. Um, and hopefully, you're appreciating the new sweet Jeffrey Dahmer glasses that I have, courtesy the styling of my fiance. So thanks to her for that retro style improvement. So I don't know if I'll get demonetized for saying, hopefully these glasses are going to help us kill the markets here, but in a good way, not in a bad way. But the market has been pretty volatile. So I want to get into just some analysis, my thoughts, and update on the portfolio because it's been a bit of a wild ride as of late. And I kind of want to show how things are still working and that they are working, and just give an update in general. If you don't know who I am, I'm Ben Collins, CFA chart holder, Chief Investment Officer, can't even speak anymore, creator of Options Autopilot, which is a automated options trading platform. If you want information or a trial on that, check the links below. And let's just kind of get into the market in general. There's been a lot of stuff that's happened. Yeah, I mean, now that I think about it, I think the Iran war started before I guess after I posted last. So that's obviously been a huge development weighing on the markets. But in general, things are kind of status quo for automation. And I'm not just here to hype up the platform, but it has been working for everyone that's using it. And that's simply through the process of automating, even though the market, and when I say the market, I'm typically referencing the S&P 500, is down year to date. If we go to Google, put in SPY year to date, I believe it seems like this is as of this close. So down 4.09%. So basically 4% year to date for the S&P 500. That has been, I think, maybe still the best. I don't know. I'd have to double check, but that's always kind of the benchmark that I typically use, and a lot of people do use. So I will look at that. In general, for options autopilot, actually up year to date, and we'll kind of go over that in a little bit here, and just how we've kind of survived. Because up on the automations and also up on some other positions that I have had on, but I kind of want to separate out both of those because even if I had nothing else on, the automated positions have worked out, and I'm gonna go over why that is, and why I think that's the whole point. We built a tool to help people, and why I think it will persist over time, just based on having things be automatically and systematically done. So the actual market itself, I mean, I would say it kind of topped out here. I'm trying to think of if I had a different line drawn previously. I guess SPX is kind of at a level I already had drawn previously there. So kind of touching previously drawn line, but I do think there could be some more downside. I don't think we're totally out of the woods yet. Hasn't, you can kind of see it hasn't technically really made a new high right here after this down candle. Hasn't really broken this recent downtrend. I wish I had Thinkorswim up. I should start using that again because I had my line and my moving average studies, and I haven't really done that as much on TastyTrade for obvious reasons. We just pretty much automated everything. But yeah, I believe it might be holding 200 moving day. I'll have to double check. But either way, obviously prospects of higher oil and the conflict in Iran is weighing on the markets. Gold's actually pulled back a little bit recently, Bitcoin as well. You would think those would be more safe haven in this environment, so that is interesting. If anybody watches Andre Chick, he came out with a very interesting video, his last video about the petro yuan, I guess, gold trade, and how that's kind of they're trying to take that over from the petrodollar trade that's historically been in place for, I think it's 60 some years or whatever it has been, maybe longer than that, I'm sure. But that's very interesting. I think I'm not a conspiracy theorist, and I don't think he is necessarily talking about conspiracies. It just makes sense from a geopolitical positioning and what they're trying to do from a strategic standpoint. So definitely would recommend that. I'll link that video below if anyone's interested. Very informationally heavy, I would say, but good information if you can, watch through it. And he generally has some pretty good videos if you've watched them before. But anyways, yeah, market is definitely pulled back recently. Again, 4% pullback, nothing huge in the grand scheme of things. If things continue, oil being higher, rates are actually looking like they're wanting to go higher until recently. So that's kind of an interesting dynamic there where you would think it would be a safe haven, but it's possible the market is kind of signaling that they think there could be pressure for raising rates, or could be other people, not wanting to hold our bonds anymore, which could become a self-fulfilling prophecy. That could be an issue. But in general, no matter what happens, I'm a little bit agnostic towards that. Obviously, we just want to manage risk and just keep things moving from an automation standpoint. Let's see if, definitely look like it's trading, since 07, pretty close to a low there. If we make a new low, that could be very interesting. This reminds me, Andre Jick was saying that options adjusted spread, saying that spreads are blowing out on high yield. I don't think that that's true. I looked at it briefly the other day, and again, they're definitely higher than they were. They're extremely tight from that standpoint. My computer's struggling with all this stuff. So yeah, they've definitely increased quite a bit, probably about 100 basis points. So that is a significant percentage change. And in general, it does kind of look like they're approaching that 3.5% spread. But I wouldn't call this blowing out. I mean, I'd say 2022, this is a blowout. And I wonder if we can go, maybe we have to, let's go 5 years. Are we already 5 years? Either way, I think that could be, there's definitely been higher highs. Let's go 10 years. Yeah. So blowing out to 10 and 11% in 2020. Obviously, that was COVID. That was pretty extreme in general. And the argument is that, if they blow out pretty high, typically can signal a recession or happens during a recession. And it's usually backward looking, confirmed after the fact. But definitely a little bit of stress creeping into the credit market, something to keep an eye on for sure. But in general, again, on a day-to-day, not really affecting what we're doing with the options, with the automations, just kind of trying to keep it simple here. In general, with my long positions, my individual kind of long positions, Intel's the only one I have on, and I had taken it off a couple days ago in general, and I just want to kind of isolate some of the automations that I was doing instead. But unfortunately missed this move today. But it was kind of a move I was looking for, and it initially seemed like it was going to finish pretty strong. So I kind of got in a little bit early. Again, I started out with a small position, only approximately the amount that I'm up in profit on Intel, about $4,000 in general. So I'm only risking my entire profit. If it breaks above 50 and closes, I will add to my position. So stay tuned for that if you want to follow along how I'm kind of doing that from a directional standpoint. At this point, these are not automated from a directional, but I'm going to work on trying to do some of those things on a more automated basis, just to kind of simplify risk management, position management, just because I typically follow a similar pattern that I've learned over the years that I think, again, would be helpful for other people. But again, as a disclaimer, this is just me, a little bit of my capital, so don't do what I'm doing. It's for educational purposes only. So if we're looking at my current positioning, and we'll go through the P&L, overall in a little bit, but you can see the MESs are all the automations, the 1-1-1s. So those are purely automated 1-1-1s with options autopilot. ES is a hedge, and I'll get into that in a little bit because I'm actually up decently on that. And I think I've mentioned before that I seemed like going in this year felt a little bit like 2022. Again, in hindsight, that seems easy to say. I said it ahead of time, but I wasn't necessarily fully positioning like that. I was just trying to, again, put on as many positions consistently as possible through the automation, and almost basically just have a long-term hedge in the event that we have like a longer-term drawdown, which we've kind of gotten. I've reset this position, so I will show that a little bit. But in general, if we completely remove anything else I've done, because this is something we're kind of testing for a fund manager, and the VIX is just 0 DTE, very short-term DTE that we're currently testing as well on options autopilot. So that's just whatever kind of beta testing with this account. But in general, the 1-1-1s are going strong. A lot of them came off today. So I'm fairly de-risked from a position standpoint. I think we had 3 or 4 close. Definitely in the past couple days when we've seen this rebound, had I think 4 or 5 positions close. So definitely pretty low in terms of exposure at the moment. But you can see I'm kind of doing 3 contracts on the longer term and then 2 on the shorter term for the 1-1-1s. You can see that these are actually in the money. So right now, it's fallen enough to be in the money with this position, which is interesting. And what is kind of cool and interesting, we have quite a few users that have positions in what's called the bear trap. So it's the put spread portion right here, this in the money. So when it goes past these strikes, or it's within these 2 strikes, this first short position and the long position, that's called the bear trap area, or I guess technically it's within this entire position pretty much. But this is when our system will recognize that and then turn the profit, take off, and just leave the position, because you have the ability to earn multiples. So typically if you're targeting, let's say 70% profit, 60-some% profit, you could potentially earn up to, I think, let's say 300 to 400% of your typical credit profit. And that should help counter losses on other positions. So I did get stopped out of a couple positions, but I'll show you in general, you can kind of see it was pretty limited. And again, that's one of the strategies about doing multiple different ones. It still swings the P&L a decent amount, so I don't want to make it seem like, oh, it's super smooth ride for sure. I think if people do that, they're kind of being misleading and dishonest. But it's because you have multiple different positions that are moving similarly. Sure, they're less exposed, but I think I had 10 or 12 positions on, and all of them are sitting at a profit, and they might swing to back to break even or a little bit of a loss, and that total dollar amount is bigger. But I think I only had a couple actually trigger as a stop loss. So again, had they kept moving, it would just kind of individually taken me out and then individually put more positions back on, which again is why this works without me interfering with it, and how I can be up year to date and the market is down. And so this is kind of I don't want to say an ideal scenario, but I think it's ideal to prove out the point as to why, again, I love trading, but removing yourself from these types of income strategies and just the strategies in general with most of the options income plays is the better way to go. Because if you're looking at the market and you're kind of freaking out or thinking you need to do something, in reality, these should work out over time. So you just got to let the market work. And a lot of them came back, hit their profit target. Now they've been pulled off. And if we pull back, now I've got quite a bit of capital, at least on this test account, to just be putting more positions on. And that's exactly how it should work over time, whether I'm dead or alive, I guess, so to speak, and literally. So let's go and see. But this is basically on the entire account. And again, I would say, you move something in and out of this test account. I would say roughly the average balance has been 25,000, kind of trying to represent a smaller account. Potential is about 6.7% on the total account year to date that we're up just on the automations. That's excluding anything else. So In addition, typically people are holding treasuries, so you'd be earning, a treasury rate of return for the past 3 months, and then you would also be getting that 6.7% return. So, that roughly on the margin at risk, it's probably a 10 to 12% return, but across the actual account itself, it ended up being about 6.7% total. And let's go to activity. Again, I do think we've now hit a new high in the account in this one. So up 6,500 again on approximately 25,000 in capital on average in this one for the year. And you can see basically all these MESs. Well, now this actually went to a gain, which is interesting. This was moving around. So roughly $1,650 to $1,700 in total profits. Okay, here we go. So on the MES, 111s year to date. So that's working. I expect that to continue to work no matter what the market does. Obviously, there are going to be short-term pullbacks and drawdowns. And there was obviously a pullback at some point when all this stuff was going down. The market was just directionally going nonstop and VIX was spiking. I did pull back to, I think, down $1,000 on the year. Again, still was beating the market based on that number, but it obviously is annoying to go from profit to a loss, but that can happen. So I do want to highlight, so the ES that's open right now, you can see has no return or has a negative gain year to date, but this was my other longer term long put spread that I had on, and back off of that. Okay. So this was basically the long put spread. There we go. And you can see how much I was up, $4,250, $4,250. Again, that balanced things out surprisingly pretty well over the past few months. I closed this down. Again, didn't try to time it. I basically closed and rolled this out farther because again, a whole, I think 4 months approximately had passed since I had put it on. And so I basically kind of wanted to roll it out and make it a longer term put play again. Also reduce my kind of negative delta exposure because things had gotten fairly even and VIX had spiked. So it kind of, I don't want to say did its job because the point is to hold it longer term. But I was just trying to kind of stair step and not fully give back that gain if we did have kind of a rally, which we ended up having, but I wouldn't have necessarily known that, right? I'm just trying to approach this in a systematic way. You can see again up 3,600. My position on right now is 4,000, and then but you can kind of see that I've almost given all that back. Actually, yeah, pretty much I've given all of it back in my other directional plays with RIVN and SOFI, which I currently don't have on there. RIVN's looking okay. It's kind of hanging in there, like it maybe wants to recover. SOFI doesn't, which is a little surprising if they are going to cut. So maybe another signal of the market expecting rates to increase in general. So that's been interesting. Bitcoin, haven't done much, but I don't know if I'll add anything at this point. So still not in the gold trades, still not doing the bonds, just kind of focused on the S&P 500 in general. And that is kind of how it has been. Let's go to the actual dashboard here. Again, this is all time on. It's hard to say. I need to figure out how we can easily kind of do a money weighted average, but I would roughly say it's been 30 to 35,000 on average balance. So this is a little high for the percentage return. So we just gotta, because I move things in and out, just gotta figure out a better way to show that as a money weighted return. So don't take that one as gospel, but in general, I'm trying to be honest with all this stuff. So you can kind of see what's closed, what's not. Let's see what we've got in here. So yeah, this is one, the win rate being 100%, that's just luck. Obviously, even with the market pulling back, we did have none of those get triggered for stop losses in the account. I don't remember. Yeah, so the 120 days, only an 86% win rate. But again, the point is just doing it. You can see the average time in trade is way higher than it normally has been. I think last year historically it was 30 days. So things have definitely picked. What does this one say? I didn't even look. Okay, so 33.3. But yeah, a bunch of those were sitting around for quite a while, longer than they have been historically, and yeah, in general, longer. So the 75 DTE has actually been a little bit surprising in how well it's done. Because I almost turned off because I was kind of thinking you're getting more premium in the longer term, which you are. But interesting that it still had 94% win rate, which is good. Again, trying to diversify across positions, across expirations. That's the whole name of the game. So again, 90 DTE and 100 DTE is maybe the sweet spot again, just for now. This isn't going to hold up in the long run. So, but if it's still 85%, we should be good, and that's the whole point of having the automation and the stop losses and the profit takes in place here. And that's pretty much it for what been doing in the market. I know it's been kind of crazy, but that's kind of what I'm just looking to do in general, and a lot of people are doing and having success with. So the less you kind of pay attention, the more you can automate this stuff, the better off it is, I would say, in the long term for a lot of these income plays. So yeah, I think that's pretty much all I wanted to cover. There's I guess we could look at oil a little bit, or the ETF for oil, and then Bitcoin just briefly round out the asset classes. I mean, in general, I've been using the oil futures when I've been doing the one-on-ones. That was one thing I did want to highlight, and I've touched on it before. Someone had asked me at one point, technically doing a one-on-one is a bullish position, right? And it is. It's not delta directionally very bullish. Usually it's like 5 deltas or so, depending on how you put it on. But my argument was, if anything ever happens in terms of tensions rising around oil, I don't know why this chart is taking forever to load, then it's typically going to be the upside, right? Not the downside. There's unlikely to be some huge demand shock to the downside. I mean, COVID itself maybe would have been that example. I'd have to go look historically, but generally, having no exposure to the upside is probably better. And this is the example as to why that's the case, right? This is a pretty, I shouldn't say pretty, this is a very extreme move, but this is why you probably don't want to be taking risk to the upside as much on the oil play. I would say this is close to topping out. Again, I'm not a conspiracy theorist. The only reason I would say maybe it would continue to go in is, I don't know. It seems to be that the people in charge, it's like they talk about positive things, like, oh, wait, hold on. And it's almost like they want oil to keep going up at a certain point. Maybe all Trump's buddies are selling, or oil people are getting out. I don't know. But I do think this is closer to topping than not. As of now, but I'm not necessarily going to take a directional play. I think there's going to be some more negotiations, some more BS kind of going back and forth, which, again, the market is kind of signaling to you it's not totally believing in what's going on right now. Otherwise, I think this would collapse quite a bit. And I wonder what it would show for volatility. Yeah, I mean, vol is pretty high. IB rank almost 70%, so pretty high at the moment. Would probably make sense to sell some volatility, but just be very careful if anyone was going to do that. That could be very tricky because you just never know what's going to happen with these types of scenarios in general. And then I was going to touch on Bitcoin just to round out the asset classes. And then we'll kind of wrap it up. Hopefully it hasn't been too much longer than my typical videos in general, but for some reason the TastyTrade site is struggling, or maybe it's just my computer, who knows. It's late at night, got to give it a little bit of a break. It's been having a lot of volatility in the markets. But yeah, I mean, Bitcoin itself kind of hanging in there. Be curious to see how it fares in the long term. I mean, I'm just seeing this for the first time. This is probably for sure, would be considered head and shoulders pattern if you follow technical analysis. And I would guess that, yeah, you could be down in this range. Again, in my opinion, if you believe in the Bitcoin story, it would be a decent time to accumulate in this area. In the way that I would personally do it, again, don't do anything I'm doing. I will likely maybe be selling some puts. Again, this doesn't give you direct custody of the Bitcoin itself. If that's what you really want, obviously you need to buy the cryptocurrency itself through an exchange and probably store it, in cold storage or whatever it would be. Off of the internet if you really want that exposure. But in terms of just getting directional exposure to both the volatility and the asset class, I would just be using this ETF. And we have that on options autopilot to kind of do that. So that would be kind of my approach there. Let's just see what strategy is doing these days. It was kind of diverging from Bitcoin ETF a little bit when I last looked. So I'd be curious to see if that is still the case or if it's about to start cracking again. I will be curious to see how that plays out. And obviously, we've been kind of talking about that on the channel for quite a while in terms of if that unravels, it could be kind of severe, but leverage positions usually get tested, and then if he gets shaken out or has to sell, it could just become a self-fulfilling prophecy. But I think that there's probably enough people he could gather to. This is insane that this is taking so long to load. He could probably gather enough people to back what he's doing and or want to buy Bitcoin. So I mean, look at this round trip. This is pretty crazy. Could get even crazier, though. I'll definitely say that. If it breaks this level, which it's looking pretty close to doing, it's held in there for now. I don't know. I think maybe you could get a downdraft kind of flush out of people if it did break this level, and this could be an interesting or decent buying opportunity. But again, there's a lot of risk here. I mean, look at it moving from 450 down to 122. It's like kind of crazy. So I might do something with this. Obviously, subscribe. Stay tuned if you want to see what I end up doing. Again, I find it a little bit hilarious that they have earnings. I do disagree with kind of turning any company into just a holding company of Bitcoin, but if you can actually make money off of it, then I guess good for him if people want to use that service. But yeah, definitely IB rank isn't even that crazy on the puts. So I mean, that's crazy. You can still get some premium for $12 strikes. So the market thinks there's some risk here, which there definitely is. But this could be an interesting way to leg into some Bitcoin exposure. So I might consider doing something like that, just because these premiums are pretty rich, but that's usually because they can move. So I'll be curious to see what happens there. But anyways, that should be it for now. As always, hope you appreciate it. Definitely like, subscribe. If you want to follow along, appreciate the channel transparency. It's not all fun and games here. Especially you can kind of see, I guess, looks like after hours maybe the market's selling off again. Yeah, down 1% for some reason. So let's actually go look at this. So this is now what went from being negative to now the hedge is up money. So what is going on here? Again, we did have a bit of a fade during the day. So the market was, will continue for weeks. I don't know how you can determine that. Clearly, there must be some outcome that they haven't gotten yet that they're trying to seek. So that's the shenanigans that are continuing to kind of keep the market uncertain. And then hopefully at some point the smoke clears, unfortunately, literally and figuratively, and you kind of resume normal life and normal markets. So definitely could be some more downside. So definitely stay risk managed, keep position sizing small, and always live to trade another day. That is the name of the game. And if you're interested, check out Options Autopilot and give it a spin, because I think in this type of environment, this is where it just keeps you disciplined no matter what, and that should help you win in the long run. At least that's how I'm approaching it, and how a lot of people are approaching it that are using it. So appreciate you guys watching, and we will talk to you later.